Hello traders, and welcome to Exness's educational video on momentum scalping. The other popular approach to scalping, apart from scalping the news, momentum scalping is based on the idea that movements on the fairly low time frames, although not the very lowest, aren't completely random, although it might look like they are at many times. The most popular instruments for momentum scalping, quite similarly to news scalping, are oil and gold, because they're very liquid and because, generally speaking, they have quite strong intraday movements, including within particular sessions as well, and the value of these movements in terms of profit and loss is quite high. But in addition to commodities, forex majors and to significantly lesser extent indices can also be used for momentum scalping. So if we're looking here at the 15-minute chart, quarter of an hour of Brent crude, it's quite a low time frame, on which traders might typically scalp momentum. And one of the first things that we can do to identify where entries and exits are possible is to use parabolic stop and reverse. For more details on that, I really would recommend you can check out our video on that topic, because that's a really useful indicator for scalping. But apart from using parabolic stop and reverse, it can often be helpful to consider candlesticks, not necessarily patterns, but individual candlesticks in many cases. For example, up here at the top, where we can see that there's two semi-doji candles, and that can often be a signal of lack of momentum or lack of desire to push higher, at which a scalper might sell in. But of course, there are various occasions where it's just not very clear what the next direction is going to be on a low time frame like this. So momentum scalping is still quite a risky strategy. In much the same way as for scalping the news, one of the ways that you can potentially reduce significantly the risk of scalping momentum is to cut your losses as short as reasonably possible. If a trade doesn't move into profit within potentially the first couple of minutes of its being open, it's often a good idea to cut it to prevent the loss potentially from growing. So in general, the idea behind momentum scalping is that the very low time frames, they're not random, especially not for commodities, which are some of the best instruments to use for momentum scalping for the generally strong movements and generally high value of movements in terms of potential profit or loss. And it's really, really important as a momentum scalper to cut your losses as short as possible, as often as you can. Thank you for watching Exness's educational video on momentum scalping. If you found this video informative, I'd encourage you to watch the other videos on scalping, especially news scalping and parabolic stop and reverse.